Okay, so the question on everyone's mind, and by everyone I mean me, Bitcoin is in the middle of a channel. Do we rise to 66K or do we fall to 53K? I'm on the fence on this because it all depends. For me, it all depends what's going on with the dollar, and the dollar is right at support, and so it could go either way.
Mhm.
And it's a strong support, it's a strong long term support. Let me just pull that up here. What's your short term opinion on that?
It's not looking good, right? We've hit 1, 2, 3, 4, 5 resistance zones now that have all been reversals, and we're below a short-term moving average on the EMA. Global liquidity kind of hit a peak where I was expecting a continuation. I mean, it's definitely very promising there, but we've got this one support level that I was already expecting a bounce from, and it bounced off of perfectly. That was the 0618 retrace level. My chart has it at 49,372. I think the low that day was actually 49,217, went a little bit lower, but it wicked right on that 0618 line and started to bounce back up. That said, since then, we've had this slight reversal, which posted a lower high, and that's not very promising. So we've got a couple of local support levels that I would want to see either maintained, but if they break, I would start to get pretty concerned. I'm looking at the daily chart, and I think the local low right now that I'm interested in watching is the 15th of August. And that to me represents a potential support area where it could bounce from and maybe head to the upside. But we have failed some areas of resistance more than once now. It's trending downward. I'm not seeing a lot of support other than this indicator on M2 global liquidity showing us that the overall liquidity availability is rising, but we need a catalyst of some kind, something in crypto that says, hey, now's the time to get in. And I'm afraid that catalyst is likely going to be a bigger sell-off. That'll be a zone for accumulation.
That's right. So that's how I feel as well. We had this wick down to what is it? This is my seasonal zone. I never remember the names of my levels. This one is the yearly average, and
Okay.
so we got down there. The thing is, we didn't get fully into it, and we never did any real consolidation, even a short term consolidation around that level.
Mm-hmm.
And you could always tell the inertia of a move by, do you make a higher high? And we didn't make a higher high. That means, it's the ball falling down the stairs, and you're
Yep.
not going to get as much energy in order to blast off without an external catalyst. And if it's external catalyst, well, you can't do any TA on that. What's bothered me here is the US dollar. So the US dollar did break the seasonal support, which it had been holding for a while. But it also means that the dollar can come back up and retest this yellow area. And this much move back up in the dollar, even if it's a bounce to a lower high, is enough to bring equities and crypto down a notch.
Yep.
So that's what worries me. And until, if the dollar was over here, if the Dixie was up at 102, I'd feel much safer. But it's not, and it hit this zone, this long term zone over here that's been support now for a while, for
Mm-hmm.
years.
Yeah,
And
we've been
so
there. It's the 100 line, right? And we don't seem to be breaking below 100 for very long. That seems to be a long-term support zone. The last time I think we broke below it was July of 23, and it was only for half a second before we pushed back up into much stronger territory up to the 108, 107 zone. So I do see the same thing. I'm seeing very strong support for the dollar and a potential rise from here.
Yeah. So what if we do get something more like what happened in 2020, where basically this is just a larger pattern of what happened over here? Then at this level that we're at, we can bounce up a little bit, get that pullback, and then really launch through lower, which could coincide with the whole rate cuts from the Fed for bonds. The issue is that I'm not sure if you're seeing anything like this, but I'm not seeing anything that shows that inflation should reaccelerate anytime in the next 6 months, or at least the data for the inflationary data is going to reaccelerate. So I do expect bonds to come down, especially as the Fed starts cutting rates. In fact, um, Jerome Powell, I don't know if you saw the recaps or saw the press conference that Powell did recently.
Mhm.
I mean, I haven't heard him that dovish since 2018. I mean, since the Powell pivot, he basically said, "Okay, things are better. We have enough data. Now we're going to start being accommodative. Let's turn on the spigots," and that's usually a cue for things go bad inside of the financial economy.
Well,
Short term.
that's true. I'm hearing lots of calls for recession, or we're already in a recession. Some rule has triggered, blah, 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 blah. I guess it's still anyone's guess in my mind as to whether or not we're soft landing, hard landing, no landing. My opinion seems to wane and shift on that as well. However, even with this, recent pullback in the market, we kind of expected there would be a continuation there. And as usual, the markets like to step in and surprise us with their ability to reverse those trends rather quickly. Almost a complete retrace from the all-time high happened in equities. And in general, the one tool I look at in terms of interest rates and paying attention to the future is the Fed's CME Fed Watch tool. And the next meeting is still showing, high probability of a rate reduction and a continuation well into November and December. So that tool has been pretty useful in understanding where sort of the direction of Fed interest rates are likely to go. And what that tells us, though, and I guess to your point, is if there is a reduction in rates and we start pulling back, that's usually the signal of a recession as well. It's usually a bad sign. That said, I don't know, I'm kind of holding out hope for this idea that that could mean good news overall, especially with the expansion into the AI industry and the fact that unemployment is still extremely low. We're basically at full employment right now, and we're still seeing strong economic growth.
That's right. And if we take a look at, I think the NFCI, yeah. So this is what I pay attention. This is my weather report. Yeah, and we're falling. So when the sky is falling, the credit conditions are improving, and so it's one of those sad things that it doesn't really matter if the individual citizen is struggling. What matters are our financial institutions struggling, and so far it looks like things are getting better, and they have been enthused by the idea of quantitative easing coming back on the table.
Mm-hmm.
So long term bullish, short term, who knows? Plus, we're smack dab in the middle of the Bitcoin channel, and you can't make any decision there
True.
at all.